Hi, Michael Kolb, CFP with Evergreen Wealth Solutions here with your April 2024 market update. Unfortunately, the start we had to the year did not continue in the month of April, with all three indices being negative for the month. The S&P 500 lost a little bit over 4%, the Dow was down almost 5%, and the NASDAQ was right in between the two, losing 4.38%. And this was mostly due to interest rates that changed a lot during the month, which we'll get into later. Despite all these declines, actually stock or equity fundamentals were pretty solid, with about half of the companies reporting earnings are up almost 5%, which is great. In addition, the technical factors were also very supportive, with all three major indices spending the entire month above their 200-day moving average. And those results also carried over into both international and emerging markets from a technical standpoint as well. However, from a return standpoint, the broad-based MSCI EAFE, the World Index, that actually lost a little over 2.5%, while the Emerging Markets Index eked out just a very small gain, just shy of 0.5%. The more important story for the month, as I mentioned earlier, really was interest rates and what they did to bond prices. Bonds really fell on these rising interest rate pressures. The 10-year Treasury rose from 4.2% at the beginning of the month to almost 4.7% at the end of the month. And that was a really quick rise due to higher than expected inflation. And this really did put downward pressure on bonds. The Bloomberg index lost a little over 2.5% for the month. Looking at the economy is actually really still a very positive economy. There's a lot of great economic data that came out, including an incredibly strong jobs report at over 300,000 jobs in March. Consumers, businesses, their spending continued to grow, and personal consumption and retail sales, all of these also increased more than expected. So the bad news here was that is what contributed to inflation. And that inflation really is the story of the month of April. Investors kind of spent the month of April reassessing what that proper level for the long and the short term was for interest rates in light of this kind of stronger than expected economy, what a soft landing may look like, and then this particularly sticky inflation. Originally, we were pricing in at the beginning of the month about 2.5 cuts per year, and that's actually way down from the 6 that were predicted at the beginning of the year. But by the end of the month, we're down to 1 rate cut this year. So we've gone from 6 at the beginning of the year to 2.5 at the beginning of April, and then down to 1. And in addition, this has put differing pressures on the stock and bond markets. And the good news to all of this is that it probably is going to limit a lot of the future interest rate volatility, because there's not really a lot of support now for the Fed continuing to cut in the short term or rising much in the short term, which just means it's status quo, which is something that the market likes. But this is a huge risk for the market. And in fact, we would say that the inflation and the Fed in general are really the most primary risk to markets as a whole. There's a lot of political uncertainty that's probably going to come around here at the end of the year, although usually markets do pretty well in election years. And then there's still the conflict in the Middle East, and more so that may affect supply chains. And there's been a bit of a slowdown in China and relatively high stock market valuation. So there's a lot of things, but again, we always say the biggest risk is the unknown, and that's why you diversify for unknown risk. So despite some declines in the market, it's actually probably really a very healthy thing to have declines from time to time. And we remain pretty optimistic. So there is some rising inflation, and interest rates did cause a downturn, but the outlook from here is pretty positive. So we're just going to take April as a reminder that markets are still subject to a lot of risks, and short-term disruptions can happen at any time. If you have any questions, please reach out to your Evergreen Wealth Solutions advisor, and have a great day.